Why trade Forex? So first of all, the main reason is for freedom. So when you trade Forex profitably, of course, you're able to make money from trading from your laptop. So that means you could travel the world and make, let's say, 10 grand a month approximately from wherever. So you could live in Thailand, make 10 grand, could next month go live in London, go live in New York. You could travel the world. There's not many professions where you could do that. Not many. The next advantage is that trading Forex is exponential. What I mean by that is that the opportunities are endless. So, yes, you could trade for yourself and make money with your own money, but you could get investors, you could create services, because basically having the skill to trade Forex is having the skill to invest money. So, when you know how to trade Forex, believe me, you could trade stocks, you could trade so many things because you've got that knowledge of investing, risk management. So we'll see how to obtain all this knowledge. Um, so then let's look at why Forex and not another asset class. So first of all, in Forex, there's no commissions. So no commissions. Then there's no middleman. So what I mean by that is a lot of the time, for instance, the stock market, the middleman could be your bank or something. So you need to call the bank and say, "Oh, listen, I'd like to buy 20 shares of Apple, for example." In Forex, you've got no middleman. If you want to do something, you just go on your computer, do it, and it's done. And it's quick. Then in Forex trading, there's no fixed lot size. What I mean by that is if you want to buy a share of Apple, so let's check the price. Apple, it's at 188. So if you want to buy a share of Apple, you need to spend $188 for a share of Apple. If you want to buy two shares, it's 188 times two. You can't buy $50 worth of Apple shares. In Forex, however, I mean, simply look at the price. You've got the 110, well, that's because it's the yen, but basically you could buy €5 worth of dollar against the yen. So that's great. Then there's low transaction fees. So the transaction cost when you buy and sell, there's some, but is so low compared to other markets. Then big advantage, the Forex market is open 24 hours, 5 days a week. So stocks, for instance, it opens at 8 in the morning and closes at 5 p.m. London time, or 9 in the morning, can't remember. But Forex, it's open all day long. So why is that? Because basically from 10 p.m. to 7 a.m., you've got the Sydney market, which is running. Then from 1 a.m. to 10 a.m., you've got the Tokyo market opening. So that means it's always open. Then at 8, from 8 to 4 London time, you've got the London session. And then from 1 p.m. to 10 p.m., you've got the New York session. So that's why Forex is always open. Then the big advantage is that the Forex market is not easily controllable. What I mean by that is the market is so liquid, like the amount of money that's represents the foreign exchange markets is so big, so massive that it's almost impossible to direct for someone to direct the market where they want. So, for instance, a counter example to that is Bitcoin. So, in Bitcoin, you can see what they call whales. So, they are the ones that have the biggest percentage of Bitcoin holding. There's something like 100 people that have 80% of the Bitcoin market. So, if they sell all their Bitcoins, what happens to the market? The market crashes because there's less demand and it gives a lot of supply. So, supply and demand, price drops. So Forex is not easily controllable by even big banks. So that's something really good. Then the other advantage is leverage. So in trading Forex, many brokers offer leverage. So that means that your money is leverage. So even if you've got an account with $200, for example, If your leverage is 100 to 1, well, that $200 account will be worth $20,000. So you've got $20,000 worth to trade. But obviously, we'll see how to manage risk because you don't want to lose 20,000 quid when you've only got 200 on your account. So leverage is a really nice feature. Then liquidity. So as I was saying in the first video, there's I think $4 trillion traded on Forex daily. So believe me, if you bought a currency and you're in big profits, you want to sell it quick, there will be a buyer. There will be a buyer. However, if you look at certain stocks, especially like penny stocks or things like that, liquidity is really small. So you could buy something. Let's say you bought it here. It's up there. You want to sell it before news or something, and there's no buyers, so you can't sell it. So you need to keep it. In Forex, that doesn't happen. However, it can happen in exotic pairs. So that's all the less traded currencies, Turkish lira, etc. However, the euro, the US, all these currencies, the liquidity is massive. Then, a really nice feature is the low barriers to entry. So you don't, for instance, to invest in an IPO, it's before a company releases their share. It's an IPO or ICO if you know a bit of cryptos. You need to be an accredited US investor. So that's the only way you can invest in IPOs. However, Forex, everyone can enter the foreign exchange markets and trade it. There's no restrictions. You can start with as little as $250 and you could trade millions, billions, of course. So these are the main reasons why we trade Forex and why trading Forex is so interesting, and that's why you came here to learn.